Hey everyone, welcome to a new video series called Stock Spotlight of the Week, where every week I'll be featuring a stock in the stock market that I feel deserves a close look at and a strong consideration to buy. Now, for those of you that are investing into the stock market, I advise you to not buy the stocks I'm buying just because I am buying them. You want to do your own research and come up with your own theories and ideas before buying a stock. Now, this week I am featuring the stock called Best Buy. And Best Buy is a really popular company for those of you that don't know. They sell mainly electronic goods for home, for leisure and outdoors, all around. As you can see here, a lot of different types of electronics, and they've been around for about 20 years already. Very successful business, especially known in America, Canada, and United States. And that's the overview of what Best Buy is. Now let's look at the stock price right here. As you know, currently this is the coronavirus situation. A lot of stocks have been getting destroyed in their valuations, including Best Buy. A few months ago, before this corona situation became like this serious, it was at an all-time high of about $90, and that's pretty huge. $90 for a share price. But now with this coronavirus situation, it's actually dropped about 20-30% to about $60. And if you look at it from a few days ago, like last week's chart, it actually was at as low as at $50 right here. Now, I feel this drop is actually a great opportunity to buy in, but before that, before buying in, you want to always look at the balance sheet and the financial statement of a company. And that really tells you how well positioned financially the company is. So let's first look at the balance sheet. This tells you the current assets that a company has and the current liabilities that a company has. Now, it's always important to consider this option when buying a company. You see here their total cash assets was an all-time high in 2017, around $3.9 million. And 2 years later, it's decreased, and then it slowly went back up to this year at 2.2 million. Their current assets right now is at 8.8, and plus other equipment and other investments, making their assets about $15 million. And when you look at their liabilities, they have about 12 million. So their assets cover their liabilities with about 3 million to spare. But the problem you see here is that their total current liability is about 8 million, and their total current assets is only about 8.8 million. So they only would have about around like $800,000 left if they were to pay off all their debt today. So what I would like to see this company is that I want to see them increase their cash equivalent, their more cash value. Having more cash, like right now, would be a very important time to pay off any liabilities or any losses. So for this balance sheet, I give it a C+ grade because it's not bad, but it's not great either. And that's one of the things I want to see an improvement from their company. Now let's talk about their business revenue, how well they've been doing for the past few years. It's been stable and consistent from 2017 until 2020 now. Slow, steady growth, a little bit of ups and downs, minor growth. And this really reflects on how well this company is perceived, because it's one of the go-to places to buy electronics for a lot of middle-class customers and even probably low-class customers as well. And every year they produce consistent growth, which is important to gain trust from investors. Now, I like to see better revenue generated in the upcoming years to really make this company more standout, because posting these minor improvements isn't going to make investing in this company that attractive. But you also have to look at their earnings history, their earnings per share history, meaning how much money the company is earning through one share, or how much we're earning through one share, through investing one share into the company. If you look at their history, their past history of a year, they've always beaten the earnings per share estimates from top analysis. And surprisingly, it's a pretty big surprise beat, about 10% at least. And last year in April, they beat it by a surprise of 20%, which is huge. Now, I feel this is actually a great time to buy into Best Buy. And the reason is that this is actually a really big time for the home work market, where a lot of companies have employees that are looking for technology and equipment to work from home. And actually Best Buy provides a lot of these stable and good products. And so this is actually a great opportunity for them to increase their revenue, where a lot of other electronic companies are actually decreasing in their revenue because there's not much people buying equipment. But right now, the home work equipment demands are actually very high. And reading a few articles really supports how I feel about this stock. Can't believe how much this stock has been drilled despite the coronavirus work from home rush. As you can see in America, especially in America and also in Canada, there are lines almost every day of workers trying to go in to buy some quick electronics to work from home, maybe like a laptop, a face cam. And with this sudden boom in business, it's gonna really help the company get back to its all-time high of $90. As you can see, it happened just a few months ago, around January. I have confidence that it will reach there within the next maybe 6 months to 12 to a year, 6 months to 12 months. And I would say the best time to buy is now because of its lower valuation. And surprisingly, it shouldn't be valued as this low because of their suddenly strong business that I don't think Wall Street sees. So this is something that I think is a great opportunity to buy in. I bought in around $50 when it's all-time low. I think another recession is actually going to be coming. Buying it around $60 is not too bad. You can start off with a small position, but I would advise waiting until around $55 to $55 to start really buying it. This will be a really great stock to rebound from the coronavirus situation. And once this virus situation is over, you'll see even more people going back to the store. Right now, business actually feels like it's even better than what normal times are like, and that's the strange part. A lot of business now is struggling, but this business is actually doing well during these times. So, if you like this video, please let me know in the comments what kind of feedback you have for it, what you personally view Best Buy as a company? Do you think it's worth buying or maybe worth investing in some other company? And what are some improvements I could do for this video so I can give better structure for everyone to really focus on? And thanks a lot for